So in this video, guys, we are going to talk about reversals, okay, in the morning time. A lot of times the market will throw you a curveball in the morning time. So you will see the market basically going in one direction, okay, and then next thing you know, it just reverses on you. So I want you guys to be prepared and understand that it's a possibility. So the best thing to do is you can actually look for these traps, okay, look for these reversals. So in the morning time, especially London, this is basically very normal in London time. You will see the market go up a little bit, and then next thing you know, it will reverse. So I want you to basically understand where are your 60-minute levels. So let's say that we have this chart right here. We have a nice swing high right here, and we have the market going up. So let's go to the 5-minute chart. Now, London time, if I trade London time, okay, London opens around 3 a.m. Eastern time. If I'm trading London, I will wake up an hour earlier, because I noticed that a lot of times that's when the market moves pretty good. So I will get up at 2 a.m. Eastern time, and notice how we have this push right here, okay? So this is the Asian market right here. We have this push, and what they're doing is basically tricking a lot of new traders and making them think that, all right, the market is probably bullish, let's take some longs, okay? Now notice how we have what gaps in between too. So we have some gaps right here. Let me actually draw that so you guys can see. Close this right here. So we have gaps. You notice how we have some gaps right here. So most likely the market wants to fill this gap right here. So we have that, and also we have the 60-minute resistance line right here, okay? Remember, it's 60-minute resistance line right here. So the market hit that resistance line, okay, and it started to sell off. So a couple of things you can do. You can be really aggressive, okay, and you can basically sell right when you see that trend line break, okay, or you can wait for that breakout and retest, whatever, and then you get in. So right here, it broke out, it retests, and notice how it couldn't close above this high right here. This candle right here couldn't close above this high, so I'll probably get in this candle right here. Or let's say that you missed this whole move right here, and to me this is the best move anyway, because it gave you that aggressive move anyway. So we have this nice aggressive move, okay, with nice supply. It came back into the supply. Me personally, I'll probably get in probably with a limit order, since I believe this is a reversal. Remember, with me, when it comes to reversals, with me nowadays, I just get in with a limit order, because if it's a true reversal, these levels will hold. So come in with a limit order right here, or you can use your fib. Doesn't matter, if you want to use a fib. Let's say where's the fibs at? Let me see, fib retracement. You can take it from this high, okay, or you can take it from this high. Okay, let's say you want to take it from this high, look for that 68 and hit that 68 right here. Or if you want to take it from this high, it's either or, because both swings is valid. So we have here, okay, if we took it from this swing right here, it went to that 61.8, and then also went to that 78 right here. So again, if you want to use fibs, me personally, I just use structure. To me, is the best way. Anyway, it came to that, and then you will look for the market to go down. So a lot of times when it goes down, it will trap some type of breakout. So me, I will look at a breakout, and the nearest breakout I see right here is this one right here, okay? So understanding this, you can get some decent risk to reward. Now you have this target right here, and we can say, all right, when it goes to that, we're gonna get in right here, and basically we're gonna target these lows right here, okay, because most likely they're gonna trap the guys that actually went long right there. And a lot of times it will go to these lows, and sometimes it'll pass these lows and go to the lowest lows right here, because this is yesterday's lows right here. So a lot of times if it's gonna break these lows, it'll probably go right past these lows too. So you can get some great risk to reward, okay, dealing with the morning reversals, okay. When the market opens up, especially London, they love to trick you, and the best way to deal with these type of reversals is maybe wait for a key level to hit. So we have a 60-minute key level, and wait for either some type of trend line break, or wait for it to break out, give you that retest, and you get in and you look for your rewards. All right, so let me show you guys another example. Okay, so we have here in the morning time, we have London right here at this swing high right here. So let's go to the 5-minute chart and let's see if we see anything. Okay, so we have this 5-minute chart right here. Okay, guys, so we have the Asian session, you know, going up right here. Again, me personally, I like to get in around 2 o'clock a.m. So notice this is around 2 a.m. and we can get in at that trend line break or even this nice consolidation right here. So first thing we have is a trend line break right here. Okay, or if you want to get in at that consolidation break, notice how the market started to consolidate a little bit right here. Okay, you get in right here. Okay, and then your target would be basically these lows right here. Right now, a lot of times when they break these lows, they will keep going. So a couple things you can do. You can just say, you know what, I'm probably going to take some off at those lows and see if I can let the rest ride. Okay, or I'm going to see how it reacts to these lows, and if it keeps going, I'm just going to, you know, trail my stop loss. So it's up to you how you want to do it, but you can get some great risk to reward, guys, you know, dealing with London, because you know, we have some great reversals. Okay, so this is another example of just understanding the market, understanding that these 60-minute levels, okay, in the morning time, the market, you know, especially London, loves to react to these levels. Okay, and if you see a nice little trend line break, or if you see some type of action that, you know, allows you to get in the market, you can get in and you're looking to trap the lows. So usually I would go for a breakout, but if I don't see a breakout, I'll go for, we did actually have a breakout right here. Okay, so most likely they're going to trap these traders right here that basically took this breakout. But I would go for some type of low. Okay, and then sometimes it will blow past those lows and keep going. Right, so let me show you guys another example. Okay, so here's another example, guys. We have the market right here, London open at this key level right here, 60-minute support level right here, guys. Now let's go to the 5-minute chart. All right, so we at the 5-minute chart, guys, and we see the market pretty much going to these lows. Okay, and basically giving us a fake breakout first. So right here, guys, we have this fake breakout into that support level right here, and they are looking to trap some sellers. So what we can do is we see this, okay, and we can either get in at that trend line break, or if you notice, we have this nice consolidation going on right here. Okay, you can say, you know what, when it breaks that, I'm looking to get in. So you can get in at the trend line breaks or any type of consolidation break, or you can wait for a retest. Sometimes it doesn't retest, especially in London. So if you are one of those traders that want to look for that retest, you'll probably have to go to another market. So let's say that this is EU, maybe British pound is giving you that retest, so you have to, you know, do something like that. Okay, so the next question is, does this happen in New York session if you're trading the indices? Okay, and the answer is yes. Okay, it happens in any market, but London is known for this. You would definitely see this in the indices too. So let me show you an example right now. Okay, guys, so here is an example of the NASDAQ right here. We have the market open up at 9 o'clock. So we have this fake breakout, okay, to the downside, you know, to make it think that, okay, now we're selling off. But this right here, this line right here, okay, is a 60-minute support level. As soon as it hit that support level, it bounced back up. Okay, it bounced up, and what I like to see is, you know, a lot of buying. So it came back, it broke this high right here. Notice how it pulled back to this demand level right here. Me personally, I will get in right here, okay, and basically I will look for my rewards to the upside. So that's how you can do it with the indices too. A lot of times they will give you this fake move in the morning time. So this was 9:30. It had this nice consolidation. It gave you this fake breakout to the downside, but it came right to that 60-minute support level, bounced back up, created a new high, pulled back into demand. I will get in this trade right here and to the upside. All right, so that's how you play those traps in the morning. You can wait for it to hit some type of 60-minute support or resistance level, okay, and then you can go from there. Now in the morning times, I would definitely look to take, reversals, but I'm not going to take a reversal if I see a 1 hour breakout. Okay, so if I see a 1 hour flag breakout or a 1 hour horizontal breakout, a trend line breakout, I'm not going to go against that 1 hour breakout. So make sure you understand that you don't want to go against that 1 hour breakout because those breakouts could be very, very strong. But if the market's not breaking out and you just see a 5-minute breakout and it goes to a key level, yes, I would take that trade, right? But I'm not going to take a reversal trade if I know that the 1 hour is breaking out, because most likely it could continue to go down, or vice versa. If it's breaking out to the upside, most likely it's going to continue to go up. Okay, so with New York, all right, if I'm looking for a reversal in the morning time, it can't be no later than 11 a.m. So let's say that the market is looking weak and it's looking like it's trying to reverse, but let's say time passed and now it's 11 a.m. Or getting close to 11 a.m. I'm not going to try to take a reversal. Okay, I'm just going to let it play out, because most likely if it didn't reverse before 11 a.m. Eastern time, most likely it's not going to reverse. It's going to probably keep going. Now it might reverse later on during the day, but I'm not trading around that time, so it is what it is. Alright, so this is the end of this video, and I will see you guys in the next video.